we love connecting with those. I find people that are in the real estate investing space that listen to podcasts. They've done their homework. They're serious. They want to learn. They come to the table with an open mind. And then after, if you have the opportunity to connect after the podcast, which I typically do, if they're interested in learning more about, what we do or investing in real estate in multifamily properties, they're not kicking tires. They are serious about either growth or their knowledge, and it's a different caliber of questions you get from people that are educating themselves.
Yeah, look, it's almost like that educational process that they get from the podcast, that now they're coming to the table with, a lot more information, and that way you can have a much more fruitful conversation. And I think also there's a lot of people that'll just get value from it, and there's nothing that'll come back, but it's just if they can get value from it and they can do something on their own, it's
maybe open back.
Yeah, exactly. Yeah, I never, it took me some time to see it that way, but it's true, because I know for me personally, it's like you see some, whether they're coaches or people out there that kind of resonated with you, right? And maybe you got something from some content that you came across and it's helped you. So that's the ultimate goal, I think. Okay, let's get going. Adrian Pannozzo, welcome to the NS Podcast, episode 9. I really appreciate you coming.
And great to be here, guys. Thanks for inviting me. It's always a pleasure to connect with you guys and share some knowledge or share my story.
Awesome. Right. So you're a former police officer turned real estate investor, wealth builder. I understand you're about 400 doors right now from your real estate investments, which is, it's just amazing. It's incredible. So I'm looking forward to kind of getting into that and getting into your story and going over all that. For the investment side, you're primarily executing on a BRRRR strategy?
For the most part, we all do nothing more or nothing else than BRRRR strategy, where we're really out there finding whether they're off-market deals or on-market deals, but where there's a lot of lift, a lot of upside to the buildings that we're buying to properly execute the BRRRR strategy.
Mm-hmm. That's interesting, and we'll get into it a little bit more, but I know in this market, there's a lot of people that are kind of a little timid with that strategy, so we'll get into it, and I'd love to kind of, see what you're doing and learn more about it. But in terms of your past and kind of where you started, what was your first real estate investment? What did that look like? Kind of just getting started and seeing that lay.
Yeah, good question. So it was about 11 years ago now. I was still a police officer, and my first purchase was a duplex in York Region, close to where I live. 3-bedroom bungalow, essentially. 3 bedrooms upstairs, side door entrance downstairs with a 2-bedroom basement apartment. Not a BRRRR or anything like that. I didn't even know what BRRRR was when I started investing. I think we picked that up for $310,000 11 years ago. And very, very intimidating getting into that game, because we didn't have any money other than the only thing we had was equity in our home. And we pulled I think we started with a $200,000 line of credit, home equity line, that we used that for the down payment to purchase the investment property. So leveraging everything we had, and at that time, obviously, it was intimidating for me. I still remember it yesterday. I was like, what am I doing? What am I doing? The world's going to end, so to speak. And we used 20% down payment on that first purchase, using our HELOC to buy it, and still have that property today, 11 years later. I want to say now it's probably worth close to $800,000. Still have it today. Never had a vacancy. Great tenants. In 11 years, I probably think we renovated both bathrooms and the basement unit. So in 11 years, we put in maybe $25,000, and we got about, like I said, we paid $310. It's probably worth close to $8. So there's about almost $500,000 in equity there. and that we'll probably touch upon it in the show, but that's the generational wealth component of investing in real estate that I love.
Mm-hmm.
But it was intimidating. Everybody has a first project or a start, and it's somewhat intimidating, but pushed forward.
So you still have that property. So basically, you're a holder. And how important do you think it is for real estate investors to have that whole mentality? Is that an important part of it, or
I really believe in long-term wealth, generational wealth. And I always, when I try to educate investors and whatnot, everybody knows somebody that, for example, bought a property 10, 15 years ago and it's tripled in value. Everybody out there knows at least one person that's happened to.
Yep.
And that's why I try to preach that if you're investing in real estate and you have a long-term mentality in mind, you can't lose. Even in the market we're in today, as you know, it's gone up and down within the last year, for example. If your long-term hold, as I say, you ride the wave. The market will come back up. And again, 10 years from now, when it's doubled in value, and that's the beauty of long-term investments. If you don't need to sell it and you're still cash flowing, the market's down 10, 15 points right now, depending on what area you're in.
Mm-hmm.
That's okay. My tenants are still paying down my debt.
Yep.
I'm still cash flowing. I don't need to sell it. So again, hold it.
Every recession you look at, in the last 50 years or even more, it's always bounced back, right? And the duration of that period is generally no longer than 1.5 to 2 years, right? So I think if you understand that, then you'll be successful in terms of doing it. So I know you started your career as a police officer and have since transitioned. In terms of that transition, was that more of a decision you made based on wanting to leave the police force, or was it based on just the opportunities you've seen in real estate?
When I started, well, I'll back up the tape. All I ever wanted to do was be a police officer. I was the guy in, JK, SK, you remember when we were young and we were in those grades, you had the police officer come to the classroom, tell you how to cross the street, all that jazz. And I was the guy sitting in the carpet, looking up at the police officer thinking, wow, like, that's my hero, and I'm going to be a police officer one day. And I didn't want to do anything else besides that. And I got hired with the police department when I was 23 years old in Mississauga. Anyways, fast forward. So I'm probably about 10 years in my police career, 10, 11 years into my police career. And I'm starting to think, okay, what am I going to do when I retire? And when I'm on a pension, how am I going to live the same lifestyle? So I'm going to be on a reduced income. I'm on pension now. I'm going to put in my 30 years, but yet I still want to live the same lifestyle as if I'm not on a pension. So how can I do that? And I thought, okay, well, if I can have 1 or 2 rental properties that generate cash flow, that cash flow can subsidize the difference between being on a pension and not being on a pension. So that was my goal. That was really what my thought process was back then. And that's kind of what led us down the path of doing the HELOC and leveraging our house in order to get that capital to start buying. Fast forward, I guess, things started to go well in our rental properties. We had great tenants. We picked good properties. We were cash flowing. So we buy one, 6 months later, tell my wife, let's buy another one. We still have room on our home equity line. Yep. Let's do it again. And she's like, oh my God, let's just slow down. He said you want one. It was only 6 months ago and we want to buy another one. Anyways, so she gave me the green light. I guess where I'm getting at, this became, and this buying became addictive.
Mm-hmm.
And we were doing well at it, and we were cash flowing. So before you knew it, we had 4 rental properties.
How long a time frame from the first one to the fourth one?
Probably 3 to 4 years.
Yeah.
But we were just buying turnkey.
About 1 year.
Yeah.
Just turnkey.
Still a police officer at the time.
Still a police officer. Had a young daughter, raising a family. My wife works full time. So it's not like, it was very busy. Obviously, shift work, court, this, that, raising a kid. I'd come home, after a night shift, sleep 3 hours, and then, I have the baby. My wife's working and no sleep. And then it's like she gets home, here's the baby. I got to fly into the rental properties. So it was busy. But when you're determined to succeed, you're going to do what it takes, right?
Yes.
So that kind of evolved. We're 4 properties in, and things were going well. And it got to a point now. So we have a principal mortgage on our house, 4 rental properties. And then after that, basically your traditional A-lender bank, Scotia, TD, Royal, whatnot, basically said you're done. Like you're now, your debt service and whatnot, you're basically leveraged to the max. You're going to have to either go B lending or do whatever else you want to do, but you're not getting any more mortgages, traditional A-lender. And so at that point, I didn't want to stop. We now used our whole line of credit for these 4 rental properties. So then being in the game now, we're probably 5-6 years, we started to develop a reputation and I guess just being in the multifamily space and attract attention from joint venture partners. And that's what really kind of opened up the floodgates when we started a joint venture with other investors. Again, still a police officer, so now I'm getting calls, emails, people saying, hey, Adrian, my friend or this or that, I've been watching what you're doing or whatnot. Can we have a coffee and talk and yada, yada, yada. And that basically just blew up to a point I didn't ever expect that to happen. And from there, we took, obviously, we started to network with these people, doing deals with these people, buying properties. And we kind of stumbled upon the BRRRR strategy. So now it was, did a bit of education on myself, did a bunch of research on the BRRRR strategy and how it worked. So the first one I thought, let's give it a shot, see where we go.
Yep. So the first 4 or 5, you weren't necessarily
No BRRRR.
on the BRRRR strategy. You were just buying good rental properties.
That's it. Cash flowing rental.
That's smart.
No optimizations, just kind of
20% down.
Wow.
That's it.
Give us the your breakdown of the BRRRR method for the guy who hasn't heard about it yet, is yet to get into it, has done their research yet. Give us your breakdown.
So buy, and there's people say that the acronym in many different ways, but for me, this is the way I execute the BRRRR method: buy, renovate, refinance, rent, repeat. And essentially, the BRRRR method allows you to essentially pull out your capital and circulate, as I like to say, rinse and repeat. That process much faster than buying a turnkey, waiting till the market, inflates itself, and then saying, oh, wow, I've had the property for 2.5 years. It's gone up $100,000 or whatever it is. Let's refinance it, pull out that equity, and buy another one.
Yeah.
The BRRRR method allows you to do that much quicker.
That's it.
There's the key right there.
It helps you grow. It helps you grow the portfolio, right? You'd be, if you look at a 10-year span, in a normal, just kind of be saving up money and buying up properties, it's going to take you a lot longer to get 4 or 5 properties. Like, you did pretty well considering you weren't executing on them before. That's really interesting. Was there anything interesting that you did at those early stages that allowed you to kind of get up to 4 or 5 properties without refinancing?
No keys.
No, just buy and hold. Actually, the very last one we bought, before we started the joint venture, the last one I bought on my own, I ended up refinancing the very first one I bought, used that to buy the last one because we were running out of the line of credit bank. So I refinanced the first one, used that equity to buy the last one, and that was the one that was my first BRRRR. And I did the research on it and whatnot, and then from there, it just took off.
It was all history.
Beautiful.
So almost the 4th, 5th, and then you're tapping into the back to the first one, and then moving forward. Would you say, like, you were a police officer, you said your wife worked full time. Would you say, just people that are working normal jobs, like that, are great? There's great potential for them to be investors, right? It's just you're kind of living testament to that.
And make it work.
You don't need to be crazy educated on the market. You just need to have this determination of finding that other pension that's missing.
And the grind, honestly, because you said it right. Right? The kid, the whole job on the side, and the tenants. It's a lot of work, right?
Tons of work. But I mean, you're all in.
Yeah,
I was all in. There was no off switch per se. There was no, I'm not going to fail. I'm going to do whatever it takes. And there was a lot of hard days. Nothing came easy. I worked my butt off, essentially. And obviously it paid off, but, as well as I do, a lot of people don't see what happens behind the scenes. They just see successful people and they think, wow, it must be nice, that guy. I wonder who handed him.
Oh, it happened overnight. Yeah.
Whatever. I can speak for myself and my experience. It didn't happen overnight.
Yeah.
It was essentially a decade of grind, and perseverance. And there were failures, but what do they say? You fail forward. And if you're failing, it means you're learning. It means you're growing, right? It wasn't all roses, but persistence got me to where I am today.
Beautiful.
Sometimes people, like, having the experience you went through teaches you so much, and that learning process is so valuable. Would you trade that in for meeting somebody like yourself back then that would guide you along the path and help you, or would you, still do it yourself and kind of trek through and learn those valuable lessons?
Yes and no. No, I think no. I'm grateful that I did it myself in a sense. It gave me the opportunity to be in the trenches and learn. But had I leveraged, let's say, a real estate coach in the investment space, or leveraged potentially a joint venture partner in one of my first or second BRRRRs, it would have saved me time and money, because I probably wouldn't have made this. And true.
A little bit, yeah, true.
But I learned, and again, this is 11 years ago. There wasn't as much as available as there is now.
For sure. Oh, for sure.
So many different real estate investing coaches out there and programs that you can be a part of.
You wouldn't have trusted somebody on social media 11 years ago.
No chance. No chance. Yeah, exactly. Yeah.
Social media 11 years ago to today.
Yeah. Oh, man.
It's like, a car from 1925 to today, right?
Yeah.
So,
well, what I want to know is, so you discovered the BRRRR method, right? You refinanced off the first property. Yeah. What was the plan of attack after that? Was there a plan? You were just buying good deals when you saw a good deal? What was your thinking?
So it kind of, like I said, it's just spiraled into something very big. My plan was to continue to joint venture and continue to build this portfolio.
Mm-hmm.
And strictly just focus on the BRRRR strategy, because, my first couple of them, however many of them, we were able to, at point of refinance, extract all of that capital and put in the 20% down payment, all the construction, all the carrying costs, getting it all out. So our money partner, for lack of a better word, got all their capital back. We own the asset with them. We're cash flowing. So, and I know one of your questions, everybody asks, what kind of returns are you getting, on your investments? Yeah. So with the BRRRR model, the returns are incredible if you know what you're doing. So when you refinance a property and you get your 20% out, you get your construction budget back out, and your carrying costs, your closing costs. So you got zero money of your own money left in the deal.
Yep.
But you're still cash flowing, and you have debt pay down. Your return is infinite.
And you have appreciation.
And you have appreciation. Your return is infinite.
Yep.
Because you don't have any money left in the deal,
Mm-hmm.
right? So it's infinite return.
Generational wealth.
And you still own the asset.
Yeah.
So it's like, you put $50,000 into this bank account. Then 8 months later, you take that $50,000 out, but Royal Bank is still paying you interest, and there's no money left in the bank account, but you're still getting interest on it. Well, there's no money left in this. There's none of my money left in this house when I refinance, but yet I'm still getting debt paid down from my tenants. I still own it, passive appreciation. And when you refinance, for those the listeners that don't know, when you're refinancing and you're pulling out that capital, that money you put into it, it's tax-free, as you know. The only time you're paying tax is when you sell it and you got your capital gains. But a refinance, pulling that equity out, you're not paying tax on it.
Yeah. I think those are the two key things in real estate is the leverage that you get from, putting down 20% and getting the full asset, and then the fact that the refinance is tax-free. Those are huge factors as to why, when you compare real estate to any other, investment option in terms of stocks, there's just a lot of advantages in terms of doing it. Why don't we just go back and can you tell us a little bit about your police career, kind of how because we were sort of talking about you were still at the police force, kind of starting these JVs, getting these calls from people about potential JVs, but you're still on the force. Just run us back through your career a little bit and
Very long career.
Yeah.
21 years of service. I had an amazing career. I started obviously like, every new police officer starts in a cruiser, on the street, on the beat, so to speak. Learning how to be a police officer, essentially responding to all the 911 calls and everything in between. And I was fortunate to have the opportunity to work in all different areas within the police department after my uniform patrol days. I think in 21 years, I probably spent a total of 4 or 5 years total in uniform. And the rest of the years were spent in plainclothes capacity, undercover capacity, so to speak, in different areas of the police. Like I had an opportunity to work in the homicide bureau. I had an opportunity to work in the Central Robbery Bureau, where we investigated home invasions, bank robberies, some serious crimes. I did a stint in the high schools. I worked in high schools for a bit. I did a stint in car theft, detective office, and then I finished my career. I got promoted to detective, and I finished my career in the undercover drug squad, which was pretty cool.
Yeah.
I was supervising a bunch of undercover officers who would long hair, beards, you'd never know they're police.
Yeah.
But yeah, that was pretty exciting. So I loved my career. I had a great career, but and there's always a but, right?
Yep.
My passion began to change from being a police officer to real estate investing, because for those first 3 or 4 went well. Then we're starting a joint venture and call a spade, it became lucrative.
There's the cash flow, yeah.
The cash flows, so to speak. So it got to a point where my interest and passion shifted from police to real estate investing. And I had a great job with the police, but yet I was still, it changed.
Yeah.
My feelings changed. And the job changed as it evolved too over year. So long story short, it got to a point where in 2017, I threw in the towel and retired at the age of 40, what I would have been 44.
Yep.
I retired. And people thought I was crazy. You got a great job, a pension, a benefit.
Why would you throw it away? Yeah.
Right?
Do you give up the pension when you leave, or
No,
it's a partial or something?
no. I took a hit.
Yeah.
I didn't get, because I didn't put in my full 30.
Yeah.
Yep.
So I took a hit on the pension, but I took essentially they give you a buyout at the end of the day. But I thought, and even my wife said at the time, you're burning the candle at both ends. You're gonna burn yourself out.
Yep.
We were financially sound from the cash flow coming in, and she basically said, why don't you just concentrate on this? We don't need still the income from the police. Just concentrate on, if all you want to do is real estate investing and joint ventures and continue to build the portfolios. Worry about that. Like, we don't need it, and you're going to kill yourself.
Yeah.
Burning the candle. So in 2017, I left, and I began to just focus on this full time.
Yep.
And attracting some great joint venture partners, and basically took the portfolio to 400 doors that we're at now. And it sometimes I smile because I think back. It all started with me thinking I want 1 or 2 properties, subsidize my pension, and I'm going to finish my career with the police department and put in my 30 years. Obviously, 2 properties, 400 units. It just went somewhere that I never really dreamt.
So 2017, you were probably on your 6th or 7th property by then, because you.
A lot more by then.
Oh, really? And so you went from 5 to.
We jumped. Like in 2016, I couldn't keep up. We were getting calls, weekly,
Really?
from different investors. Hey, I just heard you on this podcast, or hey, you did something with my buddy or my cousin or my brother or whoever. I want to do something. I don't have the time, the knowledge. I have young children. I'm busy, but I want to invest in real estate, and I'd love to partner with you guys.
Yeah.
And that just spiraled.
So how many properties roughly did you have when you left the force?
I want to say somewhere in the mid-20s.
Oh, okay. So those 2 years we scaled from 5 to 15.
You went all in.
Yeah.
And yet I'm still a police officer, and that's what I'm saying.
Yeah.
It's like, you're going to kill yourself.
That was too much. Yeah.
You're burning out. You can't keep this pace forever. There's no way.
Mm-hmm.
And that led me to eventually, like I said, retire.
And then just quickly, like, what kind of properties were you doing then? And
Multifamily, more triplexes, fourplexes, duplexes, stuff like
how
that.
long did you do that until you started kind of maybe looking at some bigger projects, big multifamily projects?
A long time, which is why, like, I know that area very well. But yeah, I want to say maybe full time for probably four years.
Mm-hmm.
And as of late, probably within the last 2 years, we've divided the company now. We have a commercial division and a residential division. Residential 4 units and under, commercial 5 units and above. So we now split, because we'll always still have investors that have so much access to X amount of capital, so they can only be in that triplex space. And then we have some really high net worth individuals who just want the bigger stuff, the 20, 30, 50 unit apartment buildings. So we have both areas now. But as of late, we've really expanded to the commercial side of things and focusing on commercial multifamily buildings.
Yes. So I know those two markets are completely different, so maybe we can kind of chat about them quickly separately. But how has your strategy or approach or something you're doing differently changed between last year and this year? Start with the residential side, if you're still exploring that.
Yeah, we're still exploring it. Basically, with the change in the market, change in rates, I mean, we were at what, 2.5 on the residential side. Now we're
2 almost, yeah.
Now we're at like what, 6.25 with the latest.
Cool.
So prices have come down, but really to answer those questions, I think both generically, being in the game as long as I have and looking at so many deals and buying over 80 properties over the course of a decade, I really, really have become very confident when I run my numbers. So I'm able to analyze and say, you know, for example, okay, we buy the building at this, and then we pump in, I'm just going to throw a number out, 100,000 in renovations. What is the after repair rents going to be? What's the after repair value going to be? What does the exit look like on a refinance?
Yeah.
So it's just being very, very tight with my numbers.
That's it.
Very conservative. Even in this market.
Yeah.
You just run your numbers properly and have confidence that you know what you're doing when you're running your numbers.
That's this.
And you're using legitimate numbers, because you don't want to inflate stuff, because at the end your exit when that burr is going to look like obviously not attractive.
Yeah.
So, you know, a decade in the business, running numbers daily, I've become very, very fluid with that, very confident in order to sit in front of different investors and say, okay, this is this, and this is what the exit looks like. And then they can make a decision.
So I guess this is the magic question, but you were running numbers last year with a certain rate and price. You're running them this year with another rate and price. Are the deals looking better now, or were they looking better a year ago?
Purchase prices are definitely a lot better now.
But I'm just saying in terms of the whole picture, holding costs and the exit, because obviously the rates are up now, right? So if you're getting some financing, then you're paying higher rates on that end. But ultimately the deal in terms of if you're gonna make a deal last year or make a deal today with the opportunities and the deals that are out there, would you rather be in this market?
Yes.
That's it.
Yeah. The cash flow isn't as lucrative as it was.
Yeah.
But when this market turns and you're buying today, we're still buying very aggressively. When this market turns, we're going to look like geniuses. Complete geniuses when you're buying in this market today. And the market will turn.
Yep.
And when it does, the spread is going to be so much better than buying stuff a year and a half ago.
Yeah, 100%.
Yeah.
What would you say is an ideal mid-2023 investment look like right now?
In what regard? Like, can you be a little bit more specific?
Let's say whether it's residential or commercial, just for you personally, like what kind of opportunities are you looking forward to in the next couple of months to take advantage of that spread?
Both on the residential and more so on the commercial side, we're looking at everything. Honestly, we're looking at 4 units all the way up to 50 units, because being able to run those numbers so tightly, I am very excited. Although our cash flow isn't as great, but I'm so excited because I'm buying stuff, 20% less. And I'm telling people, even if we have to, hypothetically, even if we have to be in the red, $500 a month for 2 years, right? We're saving $200,000 on the buy. We're still, if you offset what you're in the red for 2 years, but you're $200K less on the buy, it's an amazing opportunity. Yeah, I think everybody in real estate right now should be in expansion.
Yeah.
If you're a real estate investor, I think the next 6 to 12 months are going to be epic times to capitalize, because what's that? And everybody knows it. How's it go? When people are running away, that's when you rise and you're in Dubai. When everybody's buying, slow down.
Yeah, there's a difference between like an investor that's just starting out and a seasoned investor, and now you're seeing the seasoned investors that are coming into play, and that, I think that's the biggest difference. But can you tell us like strategically about like what kind of deal right now you're really gets you excited, specifically like if it's is it getting a really good deal on a multifamily, and doing the birth, is that kind of the number one kind of opportunity right now?
Yeah, I think so. And I love, as we're growing into the apartment building space, it's so attractive in the sense, if you buy a 30-unit building, typically our construction crew, when we're renovating those units within the building, we're in and out in 30 days. So we can turn around a
Very cool.
one unit that is in 30 days in floors, paint, trim, kitchen, baths, lights, gone 30 days. Next unit. They're cookie cutter, and you have, rather than have 30 units spread across 10 triplexes, that's 10 roofs, 10 furnaces. You know what I mean?
Yeah.
Here we have it all under one roof. It makes life a lot easier. Construction's a lot easier because it's cookie cutter. Do you know what I mean?
Yeah.
So a 20, 30 unit apartment building deal right now really excites me.
It's a
Really excites me. And some of the financing options in that commercial space, financing in that commercial space, number one, it's easier. Number two, commercial rates with CMHC on your exit on your refi are much better than residential. We're getting a commercial exit for somewhere between 4 to 4.25%.
wow.
Residential rates are north at 6.
Yeah.
So they're giving us much better rates, CMHC, up to 40, 45-year amortizations,
Wow.
which makes a difference in cash flow.
Those are huge advantages on the commercial side, And those would only apply to buildings with more than 4 or 5 units.
More than 5, yeah. 5 and above.
5 or above.
Yeah.
Yeah.
How long have you been on the commercial side for? How long have you been investing in commercial real estate for? What's that journey look like? It's a little different than the residential.
Just over 3 years.
Okay.
And again, with joint venture in that space as well. It just obviously with the people that have that kind of capital that they want to invest.
Yep.
Because obviously buying a 20-unit apartment building, you're going to need more capital than buying a triplex. Simple math. But peace of mind for our investors is we have, so obviously doing the BRRRR method and nothing but, it made more sense for me to start our own construction company. So we do our own renovations, we have our own crews, rather than going out
Outsourcing it.
fly by night character.
Yep. You know what you're getting for sure.
We have our own people to facilitate our renovations. Above and beyond that, again, with the amount of doors that we have, we started our own property management company. So it's all in this, and my vision was to create a one-stop shop.
Yeah.
Costco, right? So they go in there and you can buy anything you want from Costco, right from a pair of socks to a piece of lettuce.
Yeah.
Right? And it was the same thing with me. I thought, okay, when we're dealing with these investors, I want to give them peace of mind and have a one-stop shop. Come in, we find the property, we negotiate the deal, we run the numbers, we analyze it from here to kingdom come. Our in-house construction takes care of the renovations. Our in-house property management takes care of the property management. And the only person you're dealing with is me. There's no middleman. So you have peace of mind that our people and me are dealing with this. And that obviously comes with 11 years of experience.
Yeah.
I know the construction, you mentioned Kijiji, and I don't know if you've ever tapped into Kijiji, back in the day, man, to get out, it's tough out there. So I guess in terms of the construction, what's one of the biggest challenges that you've overcome with managing that? Because, with labor and with price increases, how do you structure that operation?
Believe me, it's easier structuring it yourself than going on Kijiji and hiring these characters.
Characters. That's a good word for it. Characters. That's a good word for it. Yeah.
Politically correct. I got burnt. I got burnt probably 3-4 projects, starting up. And,
It's hard to find good words. Everybody's good people,
everybody has a bad story.
Yeah.
General contract.
Definitely.
They took my money and never came back. They started, they didn't finish.
Half-assed it.
They half-assed it. They told me it was going to be done in 3 months. It's now 9 months. There's no end in sight.
So how do you scale construction?
Well, the beauty of this system is that the acquisitions that we take part in with our joint venture partners, they just roll over to our construction company, right? So it starts with the purchase, and then obviously it goes to the construction company to facilitate the renovations. So it's almost like a well-oiled machine.
Yeah.
I don't have to worry about scaling my construction company. I don't want to scale it. And our construction company works on nothing else but our own projects.
Got it.
If you're to call me and say, Adrian, I got a duplex in Hamilton, can you guys renovate the basement? No, we can't.
So you have your own crew or crews working in different areas and on different projects.
But just our project.
Yeah.
Just our acquisitions.
Yeah.
Joint venture, that's it.
Quality controls all right there for you. There you go. Just go ahead and
Not looking to expand this company and, renovate all of Hamilton. Not interested.
No. Yeah. And I guess doing it that way where they're just dedicated to your project, it lets you standardize not only the processes, but even the products and just everything, kind of everything you do it.
Bang.
That's it.
30 days though which crazy turnaround time.
I know you probably have your numbers down pat, but every project's different in terms of, the return and how it's all structured. What would you say your best investment looks like in the last 15 years?
It was on a smaller scale, not one of the apartment buildings. We renovated a fourplex, and that was obviously very distressed. Anyways, long story short, 10 or 11 months, the renovations were completed, top to bottom. Place was a gut. We got all of the money out that the investor put in, plus, I want to say $160,000 surplus. So we got all the money back, plus the bank gave us $160,000, which we split with our joint venture partner. So he took 80 of the surplus, we took 80. So we made $80,000, plus we still own the house, plus we still cash flow.
Yeah.
Incredible. And that's a true story. Incredible return.
And that was probably in the last 2 years.
That was where I was 2021.
Yeah. That was the market you saw those crazy things kind of happen.
Yeah, interest rates were 2%, 2.25%, whatnot.
People are going to see this video and they're going to get maybe a little bit excited about the market. What would you say are the biggest risks right now that people should look out for if they want to kind of go out on their own adventure into real estate investing or pick up a property? What's kind of the biggest risks?
I don't know if there's a major risk when you're investing in real estate, if you're in long term. If you're going to go pick up a flip and you're going to do it in this market, or maybe not a really great market, but you got to really know and have everything like incredibly tight if you're flipping. Because if you started the flip and then the market changed like it did now, and you thought, okay, I'm going to make 60, 80 grand on my flip, you're going to take a loss, right? Which is one of the reasons I don't flip. If you're in long-term wealth, I don't know if there's any real bad risk. If you're going to get involved in a BRRRR strategy and you've never done it before, I would really recommend you work with a professional, even for your first one. Just work with a professional who's been it, done it, knows numbers, knows how to analyze deals, because every step of that BRRRR, the buy is important. You overpay, the exit is tainted. Your renovation, you hire Luigi and he messes you around, your exit's tainted.
Yeah.
If your numbers aren't good and you're projecting, this is going to refinance for such amount, but it only comes in at this amount, your exit's tainted. So every part of that BRRRR is so important. So if you don't know you've never done it before, I really recommend you work with a professional, at least on your first one, because it could make or break, especially the construction component. It could make or break that BRRRR to be a successful one, or like, really wasn't worth it. Because if you're going to leave a ton of money in the deal on the exit, you might as well just buy turnkey. Forget about the rentals, forget about everything else. Just put your 20% down, put your tenants in, and forget about it. But the whole point of the BRRRR is to be successful and not leave a lot of money in the deal at the refinance.
Right now in the key aspect of the market, there isn't a lot of opportunities for cash flow there.
It's definitely minimized.
Yeah.
A lot. Like most of our profits would cash flow prior to all these rate hikes, $800 to $1,000 a month per property.
So like that's after the refi or after a refi?
After refi, positive cash flow.
It's amazing.
And now we're hovering $150 to $250 a month, 150, 200.
Wow.
It's difficult to get cash flow right now.
Very difficult. Still possible, but very difficult.
Do you think that would be like an element of when you're looking at investing that you should really look out for in terms of trying to find something with, I think that's, for me, that's kind of the most important part is like, if you're going to invest in something, try to find something that has some, at least minimal, deficit or some cash flow. It's hard.
It's very hard.
It's going to be hard.
I wouldn't buy let me put it to you this way. I would not buy a property today, even if, actually I worded that wrong. I would still buy a property today, even if it didn't cash flow, because I know I'm taking advantage of the purchase price.
Long term.
Long term. Even if it didn't cash flow, because I know, let's say a year to a year and a half from now, again, I look like a genius. I can refinance that property, and now I'm going to cash flow.
Yeah.
Because the rates are going to come down and whatnot. So would I not buy a property today because I may be very minimal cash flow to not? Me personally, I would still do the deal.
Yeah.
Yeah.
Because this isn't forever.
Yeah.
Real estate's going to go in waves. We all know that.
That's it.
From here, long-term mindset, long-term wealth.
Can't go wrong with that.
In terms of location and product, where are you seeing the most opportunity for cash flow right now?
West End, Hamilton, Welland, Niagara. Those market centers, I would think, I don't think I know, are great for that. Absolutely great. Compared to, obviously,
Something so developed.
New York region.
Yeah.
So Hamilton and Welland.
Hamilton, Welland,
Not much in between.
Niagara, Brantford.
Okay.
Yeah.
That in-between pocket between Hamilton and Welland, what are your thoughts on that? Like the St. Catharines, the St. Catharines, and delete the FCO. Is there?
I forgot about that. And we're actually looking at deal right now in St. Catharines.
Yeah.
So yeah,
I might be looking at the same deal. Just off the price. I saw something recently come through. Yeah, there's just the opportunities and the deals are out there right now.
Yeah.
It's really interesting. So just quickly, we're gonna wrap up soon, but I saw in a recent video you kind of went through a little bit of the timeline it usually takes you to do these BRRRR strategies, and you said if it averages around 8 months. Can you just quickly kind of go through that process of what happens in that 8 months?
Yeah. So kind of like the acronym, obviously we partner with somebody who wants to use our services and our professional, I guess, attributes that we bring to the table. So we, first off, I'm boots on the ground, and we're going out finding the deal specific to the capital this person has. Does this person have access? And it could be from a line of credit, RSPs, savings, inheritance, wherever you're getting your money from. Like I said, I got my start from my HELOC. So we're going to tailor the search depending on how much capital this person has and what they want to buy. Are they probably buying a triplex, or are we looking at a 15-unit apartment building?
Yep.
So that's step one. Once we find that acquisition, obviously our team will run the numbers. Here's the purchase price. Here's what this deal looks like. Rents before, rents after, construction budgets, the whole 9 yards. We present all the data to them. They make the decision. Yeah, things look great. Let's pull the trigger. Okay. We then start construction. Depending on the deal or the building, do we need permits to renovate, or is it just cosmetic and no permits are needed? So obviously our team navigates that. Our construction team then deploys on that particular project. Timelines are given, like, hey, this is a 6-month rental, this is an 8-month rental. Long story short, renovations are completed. I meet with the appraisers, who I have very, very solid relationships with. I meet with the appraisers, go through the property, show them everything we did to the property and everything in between, what the new rents are now, what the net operating income of that property is now from what it was. And then lastly, the last step is putting tenants in the property. We have our in-house property management team. They go out, they post the ads, they meet prospective tenants, they screen them, they do all the background checks for the tenants, talk to the landlord, talk to the previous landlord, ask for pay stubs, ask for credit. They do all that, ultimately put the tenants in place, and then our team has a 24/7, maintenance department that will deal with anything that comes up with the tenants and looks after them. Start to finish on our triplexes and fourplexes, that process lasts anywhere between 6 and 8 months. And then refinance, loan money out. Obviously, bigger stuff like 20, 30, 40 unit apartment buildings takes long.
Yeah.
Because now we have to renovate 20 units, not 3, and whatnot. But that's everything that happens within that time frame.
The triplex, fourplexes, are you more time are you doing renovations or are you doing conversions?
Conversions.
And then on the commercial side, are you renovating as many of the suites as you can and trying to optimize the rents there? Is that
Absolutely. The same process. It's just on an apartment building, but the BRRRR model is the same, whether you're doing it on that apartment building or a triplex.
you're just trying to optimize? You're just optimizing the property.
Yep. Stabilize, renovate,
Yep.
and then refinance.
You've made your life so much easier with the quality control because all in house. If you were to outsource even like the fine tenants part, everybody knows that could be quite the pain, right?
Yeah.
I think you made your life a lot easier by making it all in house for sure.
And most of the deals you're doing, you're structuring them specifically for an investor, or you're doing something JVs with multiple people?
We've done a couple with 3 different investors coming to the table, bringing capital, but typically it's just like the one investor in our company.
Got it. And what's your take on, a few years ago, there's a couple of these platforms rolling out in terms of, and I think it's sort of the future of real estate as real estate becomes unattainable for some people. What's your take on shared ownership and sort of this opportunity where you can have, there's a platform called Addy where you can put down $1,000 and get whatever that fraction of that property is. What's your take on that?
That's a good question. I haven't really thought in that direction yet. There has been conversations with our team and our lawyers about potentially starting a GPLP kind of structure, which allows for, obviously, you raise capital and then you just deploy it.
So,
Whereas the investors really don't have a say. You're just guaranteeing them a certain rate of return and they get their dividends and that's it. So I think that's the next step for
the next play for you.
There you
That's the
go.
next play. That's it.
going to take it to there. So we're actually actively speaking to our legal department about that now and kind of navigating those waters. But yeah, I wouldn't close the door to that.
Fantastic. I think that's the next play for you. I appreciate you joining us today, Adrian. Really great conversation. Yeah, and knowing maybe to go a couple extra minutes and I'm some men with a lecture. But hours and change. Yeah. Oh wow, it's took it an hour. Yeah, not bad at all. I know you probably have.
I learned a ton in that. I learned a ton. That was awesome.